Ladies and gentlemen, welcome back. This is Christopher Aaron. By the time you see this, it will be Friday, August 5th, 2022. I hope that you are doing well. It is time for a gold price update. I have been sick with the coronavirus for the last couple of weeks and a lot of work going on aside from that. So I hope that you are staying healthy. I'm feeling better now, and I'm glad to be back here. Let's get into it. Please hit the red subscribe button and the bell icon to make sure that you will be notified when these videos go out on YouTube. And make sure to follow us at iGlobalGold on Twitter, because sometimes, such as the last several weeks, I don't have a chance to post video updates, but I can sometimes get quick updates onto the Twitter account. Briefly, legal disclaimer. And here we go. Let's talk about gold. Where are we since the last support test? Now, you'll remember some of the last few videos, we were talking about this big decade-long cup and handle pattern, which we had seen the breakout for right there at 1850 back in February on the news of Russia invading Ukraine. However, that pattern failed just about 2 months ago right there, succumbing to pressure at the 1815 level. So that is a failure of the cup and handle pattern. That was the big picture pattern that I was hoping would play out. That is the pattern that had the $2,883 target. However, when you fail to maintain the structure of the handle on a cup and handle, which is what's happened here, you can see we closed back below the dashed handle resistance, which was exceeded. So that pattern, when you fail to uphold the integrity of the handle, that failed. That said, is there any bullish resolution that could still be possible for gold here over the intermediate term? Let us zoom in here to the last 4 years of this pattern and look at the most basic features that we can see. Now, here was the handle that we were looking at for that cup and handle. You can see breakout, failure. Aha, okay, that's a failure. However, is there anything else going on that could still be bullish? Yes, there is. And I shouldn't have to say this, but for some reason, we always get more people that like to tune in when I do silver updates. However, in this case, in the situation that we've been in here for the last couple months, there's a lot more wiggle room on the silver chart than there is on the gold chart. So I've been primarily focused on the gold pattern here because silver is going to follow gold, and gold is the one that is at the critical level right now, not silver. So let's take a look for gold. 2018 through the present. Is there anything that we can notice here about gold's pattern for the last 4 years, especially with respect to just the last couple of weeks? Let's take a look. So the pattern that began at $1,180 exactly 4 years ago in August of 2018, formed by a successive series of higher lows throughout 2018 and 2019. Then the market tried to accelerate away from that trend, and with the acceleration moving quasi-parabolic into 2020, what has been required here is a period of consolidation. Net sum sideways price action over the last 2 years, to come right back to that linear trend of buyers who had been stepping into the market at higher and higher intervals. And look at what has happened here over just the last 3 weeks with the mini blip of a breakdown below this very clear rising trend. One weekly close, second weekly close, back above the trend, and now accelerating higher in favor of gold here, almost back above $1,800. This then registers as a false breakdown of a 4-year trend. And you know what they say, there is nothing more bullish than a false breakdown. And so we're seeing the springboard type of reaction. Now, what is going to be critical here for this analysis is valid until proven otherwise. The trend in this case of buying pressure is valid until proven otherwise. And so when we take a look at this trend of rising support, yet flat resistance here at the 2070 to 2074 successive peaks here, what we expect is something like this. This is the logical expectation for a rising support pattern with flat resistance. This is a bullish pattern still, although it's not as bullish as would have been if we had held above the handle support at 1850 going back 2 months ago. So the pattern should play out like this. The bias, the highest probability expectation for gold at this time is as follows. Little continuation here over the next 1 to 3 weeks, should be stalling out below the 1875 level. I would expect a retracement from that point. That should bring us into the 6th test at the valid rising support here over the last 4.5 years. We should then get an acceleration. This will be a functional 3rd test of the flat resistance below 2074. The 3rd test in our model should not be successful. Based on a study of many markets over many time frames, it is typically not the 3rd test that will see a breakout of a flat resistance. However, it is typically the 4th test that will see the actual breakout. That said, would I want to be selling all of my gold into the 3rd test and trying to buy it all back here, let's say $100 less? Absolutely not. But perhaps a slight siphoning off of some profits at this point, or a slight protective action here into the 3rd functional flat resistance test would be appropriate. And then we should be rounding up. And we're talking now basically a 12 to 18 month forecast here. So we're bringing it into late 2023, perhaps early 2024 for the break of 2074. Now, what will this mean when we break 2074? I said a moment ago we had failed to uphold the integrity of the long-term cup and handle pattern, which negates the 2,883 target. That said, when we break higher, there will be a secondary target which will be considered valid until proven otherwise. And what will that target be? It will be an amplitude measurement of the entire consolidation here below 2,074, which is a $397 amplitude, and that will get added on to the breakout point of 2,074, yielding a target, which is not plotted correctly on the y-axis because we don't have enough room here. However, the target will be this peak with $397 in amplitude added onto it. Final target for gold for the intermediate term is going to be $2,471 per troy ounce. This is the highest probability expectation at this moment of time, given a still valid rising support here going on for 4 years. Probably the worst sentiment that we have seen into this low here since, probably back down there. I mean, that should make sense given a rising support that needed to consolidate for 2 years to get back to it. So really bullish setup here, despite the horrible sentiment, despite people throwing in the towel. The way that the chart looks at this moment, that's all we can speak to. What is the logical conclusion at this moment? Here it is. It's spelled out for you. Now, I do want to emphasize that this rising support must hold to keep this target valid. And actually, I want to not only emphasize it, I want to double emphasize that. Because if this support here were to fail, let's say over the next couple weeks, which presently comes in at the $1,725 level, $1,725, if that were to fail, all of a sudden this pattern looks like it would succumb to selling pressure, especially at the flat support level here at 1677 as a next consequence, and we would be looking at a much more bearish scenario here that could play out for the next several years. However, as long as rising support holds, this is a bullish ascending pattern where the lows are coming up in time and the peaks are flat for resistance. That is a bullish pattern unless proven otherwise. This is how technical analysis works. You have one set of expectations unless proven otherwise, and I've given you the level here that would negate this pattern. So we stick with the highest probability unless proven otherwise. Now, I will actually tell you one more sort of more intricate point here. If this rising support were to fail, but let's say 12 months from now, up here at the 1900 level. So let's say we get the bounce here, we come back, test the support again, get the third functional test of flat resistance, but then fail in here around $1,900, let's say this time next year, it would actually be much less catastrophic than if the failure were to come, let's say down here where the false breakdown was, or within the next couple weeks. So the longer that we can maintain the rising support, the more bullish that this pattern becomes. And so if the break of the rising trend were to happen later in time, it's less bearish than if it were to happen here. Okay, we'll get into more of that later. For now, let's stick with the visible pattern. And what I do want to tell you is that there is something to be said into the next surge here, perhaps into this peak or this peak, for considering what if this rising support fails. I told you it's 1725 right now. What if the rising support fails here within the next couple weeks or the next 1 to 3 months? This is when, because this rising support will be so critical, one would want to consider buying a gold or a gold miner or a silver insurance policy depending on the individual. This is key. No analysis here that I can give is going to be appropriate for 100% of the individuals. But a gold insurance policy could be appropriate if you are highly leveraged. Let's say you're all in on the gold and the silver mining sector. Maybe you've taken out some debt to make those investments. Maybe this represents 100% of your portfolio, and if that went down, let's say, by 50% or 70% from current levels, that would make you very uncomfortable. There is something to be said for, in that type of situation, considering a gold insurance policy. And what am I talking about with a gold insurance policy? I'm talking about buying, not this moment, but over the next several weeks to several months here, gold put options, put contracts, which would protect the rest of your portfolio in case the bullish scenario were to fail. And then we talked about that could be a serious decline if it were to happen over the short term. It would be less serious if it happens about a year from now. But the time to be buying the insurance policy would be into the peak here as we approach 1800, perhaps 1850, in case this were to fail over the near term. And so this possibility, as I said, it will not be appropriate for all individuals, because if you're, let's say, entirely in the stacking crowd, you might welcome gold failing here. You might say, if gold breaks support, good. If gold falls back down to 1450 or 1200, great, because I'm not on leverage. I'm using only discretionary funds. That would be awesome. But I'm going to be honest with you guys. I know a lot of investors are not in that category because I know how investors work. I work with a lot of different people across the spectrum. And for some people, if gold were to fall back to, let's say, 1450 or 1200, that would be catastrophic to their portfolios. So, this is something to consider. If you do want to get more in-depth into the type of analysis that we are doing, including a detailed discussion on buying gold insurance policies or put contracts, depending on your situation, we will be featuring an in-depth discussion on this week and next week in the premium member updates. Something to consider, as I said, if you are highly leveraged. Either way, I hope you'll take to heart that we've had some of the worst sentiment in this sector here on what has just been a very bullish signal. We've seen a false breakdown and therefore a valid support test at 1725. It doesn't have to mean gold going to that 2,471 target even this year, even within the next 6 months. But as long as that rising support holds, we have that target, which is about $600 higher than where we are today. And that is a bullish setup. I'm very pleased to say that because, boy, it had us right on the edge. If you would like to follow along with us in our premium service, Precious Metals Intelligence Plus, we produce weekly videos like you are seeing now, but much more in depth. We cover not only gold, but silver, the gold and silver mining sector. We cover Bitcoin these days, the stock market, the currency markets, and the rest of the broad commodity markets, including the exact open market buy and sell signals that we are using here. I cannot fathom being an informed investor on the technicals without joining us in Precious Metals Intelligence Plus. And as I said, this weekend coming up, we will be focusing on this insurance policy scenario. So if you want to understand how this would work, the risks, the benefits, please join us. If you are a higher net worth investor, you must consider making these investments, but doing it via private placement. Private placements get you the most leverage when you're looking at the gold and silver mining sector because you get free, yes, free, warrants with every investment that you make. And warrants get you nearly, not exactly, it depends on the strike price, but nearly twice the upside for the same amount of risk compared to open market buy signals. Remember, this includes a free subscription to Precious Metals Intelligence, so you're not going to miss the things that we're publishing week in and week out. It's just with this, you get access to the actual deals that myself and my colleagues are negotiating personally with these mining companies, and we take no kickbacks from these mining companies. This is entirely dedicated to investors such as yourself and myself, because I put my money on the table on every single investment that we make. Make sure to check out Elite Private Placements if you're in this category. If you would like to speak one-on-one with myself, Christopher Aaron, just like we're talking right now, but as opposed to this being generalized, for thousands of people, where we actually sit down and we talk for 30 or 60 minutes about your situation. Are you in that category that would be appropriate to consider a gold insurance policy? Because let's say you're very leveraged, or I'm going to be honest with you guys, I know some people have taken out debt on credit cards to buy gold, silver, and the miners, and that can work if we get rising prices. But if prices go lower first, you can run into a situation where you're unable to make those payments and you have to liquidate at a loss before you ever get to participate on the upside. I have seen this happen. I did this once about 15 years ago in my career, and I just barely made it through. That's how I know about this kind of thing. I know people do it. That's why I offer consultations, to make sure that you are doing this in the most appropriate, the most educated way for yourself. We can never make guarantees about these markets. If anyone's coming out and saying, I guarantee you that gold will be this price 1 year from now, come on. It's a bunch of BS. But we can look at the visible evidence, and then we can make educated assessments about what to do depending on your situation. This is the key. No one situation is going to be exactly the same, so no one investment option is going to be the same for every single individual. Thank you for tuning in. The charts, as we see them now, I am happy to say are bullish. Boy, it's been a long time since we've really been able to see that. The target is higher unless proven otherwise. Let's leave it at that for now. I will see you over the coming weeks. Take care of yourself and stay healthy.